Hello, everybody. Welcome to this week. And let me tell you, what a week it has been. We've seen a lot of interesting stuff on the market. There's been more news. We don't have a slow news week this week, so we got lots to talk about. First thing I want to do, welcome everybody as you guys are slowly coming in. It's great to have you here. I always enjoy that you guys spend part of your Sunday afternoon with me. It's fantastic. Definitely love that. And for those of you at home who well, I guess you're all at home. But for those of you who are watching this on the replay, huge thank you for you guys too. About 75% of everybody who watches is watching this on the replay. So that's fantastic. All right. Now, I do got a lot of news. We're going to jump into news here in just a moment. We will recognize, a lot of our news this week was dominated by a certain Elon Musk. And if you remember, we had an old segment on this week. It was what in the banana bread's going on with Elon? We could certainly, I almost called the stream, what in the banana bread is going on with Elon? Because there have been a lot of Elon news, highs, lows, in betweens, and some absolutely weird stuff. So we're going to get to all of that today. Don't worry. Quick little hi to Jill. Hey, thank you for showing up. And good old Paul Santori is in the house. Hello, Paul. It is fantastic to see you. All right. One of the things I'm going to say right as well, if you have not yet hit that like button, be sure to do that right away. I always forget to tell people to hit the like button, to be honest. But what it does is it tells the algorithm that, hey, people are interested in the live stream, and it sends it out to more people. It just pushes it out. Sometimes people will discover us that way, which is fantastic. Another thing I just want to mention as well, so I want to talk tiny bit about Blossom before we jump into some news. So I have put myself over on Blossom. So you can see my portfolio anytime you want over on Blossom. It doesn't give you as much detail as when I do one of my deep dives on the portfolio, but it just gives you the opportunity to see what I am doing as I do it, which is great. And I'm starting to ask a lot of questions, and I'm starting to post some of the video links over there as well. See if we can get some new blood in the house as well. So any of you here today who came from Blossom, let me know in the comments, or if you're watching on the replay, well, those other comments, because those are two those are worthy as well. And Dominique's in the house. Hello, Dominique. Always love to see your comments. We got Jay in the house. Jay has the distinction of being our very first community member, and that's why he is all in a different color. I think everybody else, if you're watching this on YouTube, I think everybody shows up in gray except for the community members. A little bit about that just before we jump into that first news story. We do have, is it this week? I think it's this Saturday. I think it is. So this Saturday is the March community member exclusive video. So it's the second Saturday in every month that we do a exclusive community video member. Last time, and we were a little late last time because I had gotten sick and all of that fun stuff. Last time we actually looked at some of the tools that I use to do deep dives. This time around, they have voted, because I let them vote on whatever they want me to do. And this time they want to learn how to use stock screeners. So that's what we're going to be doing. So if you're not a community member and you really want to understand stock screeners, then what are you waiting for? Join up. You'll also get to see all kinds of little exclusive things of what I'm doing in my portfolio as I do them, and what I'm doing with my dividends and all of that fun stuff. And I'm always open as well with community members to see what else I can do just to help them out. So I try to keep my line of communication open even more to the community members, but I'm pretty open to everybody. You guys all know this. I try to answer everything. I will say, I know I've seen this. Sometimes if you do a reply on a video and you use a bad word in that reply, a lot of times I see that you did it, but YouTube takes it and they're like, no, you can't use the S word, for example. So it's not that I'm not replying to you. It's that I can't reply to you when you do stuff like that. Or as well, when you're putting in replies and you want to put in a stock name, don't put the .to. If you want me to know that there's a dot something in it, like .un or something, just put it in brackets, because as soon as it sees the dot, YouTube thinks you're trying to send me off to a website, and it goes, Now, usually those ones, it'll just put on a page where I can actually still approve them and get them out for you guys. But the last thing I want, because it's very important to me, I really, really like to try to reply to everything. But sometimes when you guys take that out of my hands just because of words or things like that, well, that's not always the best. All right, now we got Redbeard's World in the house. Hey, Redbeard. Hello, Nicole. And let's see here. Jay has bought 3car.un, an MFC, and a Kiera this week. Ooh, especially on that MFC. Holy banana bread. Manulife Financial has been doing absolutely fantastic. They're up about 14% roughly so far this year. So they're a stock to watch. Definitely a stock to watch. They had fantastic earnings that came out, I think it was roughly a week ago. They're raising their dividend. Well, they are a dividend aristocrat, and you'll see they're actually going to show up on tomorrow's video, because I'm doing a video on aristocrats tomorrow. All right, and we have Scott in the house from Create, Save, and Invest. Scott is a huge supporter of the channel, and if you guys have not checked out his channel, definitely do so. And he has a live stream every single morning at 10 a.m. Eastern. So, or sorry, no, it's 11 a.m. Eastern. So 11 a.m. Eastern every single weekday. It's a fun group of people. So check him out. He is awesome. Also looking to do another collaboration with Scott. We did one over on his channel. I might do the next one on his channel, but we're going to bring him over on here. We're going to get him over here fairly soon. Just so if any of you guys haven't met him, you'll have an opportunity to meet him. Hugh is in the house. Hello, Hugh. It is fantastic to see you. And we've got Mr. Red Taco celebrating snow, or perhaps not celebrating it, but hating it. A lot of people hate snow this time of year. Afternoon, everyone, says Mr. Red Taco. And we've got Abalash saying, any recommendation on harvest ETFs? I noticed you bought HUTL. I do like HUTL. I really want to start looking at some of these individual groups. So let me see if I can put together a harvest video coming up fairly soon. I'd love to start pulling apart harvest. I've already done purpose, but I know a few people want me to do evolve. So yeah, absolutely. But yeah, there's a lot of good harvest ETFs for sure. Huddle obviously is my favorite of those. I'd see Jay says, that should be a good video. Yeah, absolutely. And yes, collab again. Absolutely. Abalash in here again. Hi, Candace. I started seeing your videos since 3 months and started investing in March. Oh, you're definitely brand new. Well, I got a lot of content out there for you. And especially if you notice any of the ones that have FIQ on them, those ones are geared towards beginner investors. And here's the other thing, Abalash. Do not be afraid to ask questions on videos. If I throw up a video and you're like, well, okay, I'm not sure what's going on here, ask me in the comments. I reply to everything. So anything I can do to try to help, raise that bar for you so that you can become a better investor, that's what this channel is all about. We're about you. Oh, that should almost be a tagline. All right. So I'm going to pull up the first news article right now. So on Thursday, we'll start with the positive one. SpaceX launched some astronauts. They worked with NASA to send some astronauts up to the ISS. They've done this before, but this is always fantastic. Like I absolutely love SpaceX. No matter what Elon is doing, SpaceX to me has been a success. Now, here's a question I will have. If SpaceX were to go public, are you going to be lining up to invest in them? So let me know in the comments what you think. Would you invest in SpaceX if they went public? Or would you perhaps, in a case like that, start to look at perhaps an ETF that has SpaceX in it? I certainly would. I would very, very likely invest a little bit into SpaceX, at least even a little bit, just because that would be so kind of cool. Now, in addition to all of that, SpaceX, of course, they also take up their Starlink, which is another one of Elon's things. Now, they've actually begun to launch their V2 satellites. And their V2 satellites, they're the same as their other satellites, but they're much smaller. And they have 4 times the network capacity of the current Starlink satellites. So that's just absolutely kind of cool. All right, we got a few more things in here. Dominique says, hopefully the market drops a little after the Fed meeting in March, keeping a little cash for opportunities. Yeah, there's a lot of different meetings coming up. Before this video is over, I'm going to look at our calendar for next week and bring up all of the meetings, because somebody asked if I could start doing that. And I said, yeah, absolutely. Trevor is in the house. Hey, y'all. And yes, SpaceX is a yes for me. Scott wants to get in on SpaceX. And Abalash is also saying, I am looking for a drop soon. Well, keep in mind, guys, we are still in technically a drop. So it's hard to, well, it's really interesting. Here, I got a couple of thoughts on the market. The market, I think, was very overvalued in 2021 when we were all up and, we're hitting brand new highs on the S&P practically every day. So to get back to that point, I think it's going to take a bit of time, because I think part of that inflation was a lot of all of that extra money that was in the economy, all of the supports, all of the new retail investors coming in. So I think that it's going to take a while to get up to that level. We're still going to climb. And I think once we bottom out, and I still think we got a bottom in front of us. I can't prove that, and nobody can. If anybody says, I know 100% there's a bottom in front of us, or I know we're already past the bottom, don't listen to them, because they don't know what they're talking about. It's only probability. And I'm just, from what I see, I think probability-wise, we probably have a bottom in front of us. I absolutely hope I'm wrong, though, because it's always fun to be investing in the green. And there's also a lot of interesting things going on. All right. Now, and Abalash says, there is a Bank of Canada meeting this Wednesday, but I think the Fed will have a higher impact on the market. Yes, absolutely. The Fed has a much more prominent effect on the market. So when the Bank of Canada comes in, here's the thing about the Bank of Canada. We're expecting no rate hikes on this meeting on Wednesday. And in fact, I've got a story a little bit later that kind of ties into that. So I'm not gonna spoil it just yet. And Ciso99 is in the house. Hello, everybody. He says that is fantastic. I think it's a he. It might be a she. I don't know. Anyway, Ciso says hi, everybody. And that is fantastic. Okay, let's just move a little bit further into our Tesla story. So the whole SpaceX part was great, but we also had the Investor Day. Oh, dear banana bread. That was not well received at all. In fact, it was so not well received that Tesla's stock actually plunged close to 7% the next day. Now, a few things that did come out of this Tesla meeting, of the Investors Day. One is that they're planning to slash silicon carbide use by about 75%. So Tesla engineers have found a way to use 75% silicon carbide and still get the same effects within their cars. As you can imagine, this was not good news for some of the chip manufacturers, especially ones that are currently providing a lot of these silicon carbide. So 3 of them, ON Semiconductors, on that news, they dropped 1.89%. ST Microelectronics, another big chip manufacturer, they dropped 2.42%. And Wolfspeed, they dropped 6.85%, all thanks to Elon's little meeting. Now, I got one last little thing about Elon. Let's just get this in here right now. So he actually applied to do human testing on his Neuralink, and the FDA has rejected that application to start testing on humans. Now, that is probably a really smart thing because since December, 1,500 animals were actually killed in testing using Neuralink. So I don't think we're ready to start testing yet. And the FDA was like, yeah, no, no, no. There's just way too much. There's way too much danger involved in this right now. You're not starting to use people. So hopefully that's a good thing. I'm thinking. And now Dominique mentions that she had watched 10 minutes of Tesla, blah, blah, but no real plan. Yeah, and that's that whole thing. With the whole Tesla thing, interestingly enough, I had heard rumors that Elon was up into the wee hours of the morning the night before doing Twitter stuff, so he kind of didn't even look like he was entirely fully there. So yeah, there was that, and I think that when they said that, okay, this is not for the stock investors, this is for the investors of the planet. When they come up with lines like that, and then sort of emphasize the whole green, it really kind of left investors not knowing what was going on. And that's one of those reasons. Now, Tesla's starting to recover, and Tesla will recover from that. But it was just kind of like they shouldn't have called it an investor day if they weren't going to do typical investor day stuff. And they didn't do typical investor day stuff. They absolutely dropped the ball on that. And that, it sort of goes without saying, Elon is very good at dropping the ball sometimes, and that is what happened in in there. Okay, and Ciso says best Canadian penny stock in my opinion, PNE, yield of 10% in the energy sector. Yes, yeah, PNE is really. I don't even know if I would call them a penny stock anymore. I'm pretty sure they're above a penny, sorry, above a dollar. It really depends on your definition of penny stock. But PNE has been it has been a solid performer in the energy sector. And if you had gotten in on them even 3 years ago, the return that you would have right now is just incredible. But that's a lot with that sector. I mean, who could have seen the war coming between Russia and Ukraine? Who could have seen all of these effects? Who could have seen that energy boom? That's the whole thing. If we all had those type of crystal balls, by gosh, we'd all be really rich. All right. Front 2421 says, I use the opportunity to acquire more YTLSA covered call Tesla. Yes, that's the purpose. High yield Tesla ETF. They do use covered calls. This is a fantastic covered call ETF. I mean, they've got an insane yield right now. Like it's going up, so the yield is coming down, but the dividend payment is not changing. And right now, they're still paying just over 30 cents a share, which is absolutely insane. So I do love that. And here's the beautiful thing. This is the way I'm playing it. I got a little over diversified in YTSL. I was up to about 7%. Now I sold a tiny bit off because I don't like it when I get above 5%. But that's just the way I'm like super diversified that way. So right now I'm very, very happy with this stock. And I think there's still a good opportunity because as Tesla grows and as Tesla starts picking up value, you're going to be hitting, like, this is going to be a stock that pays you insane dividends, and you're going to get some really insane growth. Well, growth wise, right now, I think I'm in more than $1,000 in my TFSA just from the growth alone on that stock. So that is absolutely, to me, fantastic. And we have Ayush here from Blossom. Yeah, see, I mentioned that at the beginning of the stream that I've been trying to sort of push my presence a little bit over on Blossom just to help people who don't know about our community so they can come over and check it out and hopefully say, hey, maybe this meshes. That would be kind of awesome. So yeah, we got definitely a little thing going on here. Any idea on NWX? Let me just take a look at them really quickly here for you. Because believe it or not, I don't remember every single stock. And I feel like I should know this one. NWX. Give me 1 second here. Let's just, whoops. It helps if I actually pull up the right resource here for that. Whoop-a-doo, NWX. Come on, my friends. All right, there we go. It's just loading. It's a little slow today. Probably because I got so many things open right now. All right, Newport. That's right, Newport Exploration. Ah, yes, I have run into these guys before. Now, this is another one. They've done amazing, but they have been falling recently. And the reason they've been falling recently is a lot of these companies are tied to what's going on with the price of oil, with the price of the whole energy sector. And this is a company that has done that. So they have risen. They at one point they were up to about 58 cents a share. And I think right now they're down around 30. So this is a company that let me just take a look and see what do they got here for market cap. See here, you got 32 million. They're small. So I would be a little bit leery of them. I'm not saying that you should get out of them, but I wouldn't go too deep into them because until we get a turnaround on oil, until we get a little bit more stability in that sector, this one's going to be up and down. So you want to be really kind of careful. Whatever you do, though, if you've got money in there already, I wouldn't panic sell at all because obviously the sector it's in, it's more than likely going to come right back up, which would be awesome. All right, we got Jordan in the house. Heidi ho, Jordan. Great to see ya. Could I get your thoughts on investing in Canadian bank ETFs like ZEB, for example? All right. Yeah, I do like some of the bank ETFs. I'm in a bank ETF called BK. I do like them, but here's the thing. Right now, banks, last year at least, banks really struggled. They do seem to be picking up a little bit in the early part of 2023. That's good. I think having a solid bank ETF, whether it be ZEB, and I think that's one of the BMO ones, I think they're solid. I don't think you just have to be patient, I think, with the banks. Let them start bringing themselves back up, and we'll we'll sort of see where it's going to go. But I don't think you have to worry too much about it. I think banks are starting to really turn around. Even Canadian Western Bank, I think their last earnings was actually not too bad. When some of the big six were having a little bit of a struggle. So, yeah, I think the banking sector is good. I think it's one of those ones you just have to be a little bit patient with. And it really comes down to if your goal is long term, these banks, especially the big six, they're blue chip. They're going to be there. They're going to rebound. Even something like Scotiabank. Now, I did move out of Scotiabank, just full disclosure. I moved out of Scotiabank over to National Bank only because I see a longer I'm seeing a little bit more growth potential, and you'll get an idea of what I'm thinking about with National Bank on Thursday because I'm doing a deep dive on National Bank. All right, banana bread ETF. That's what we need. We all need banana bread ETF. There actually used to be an ETF, a banana ETF, but I don't think there's one anymore. Or if there is, I haven't found it. But that is interesting. Blossom Social Investing. So yes, I did sign up with Blossom, just so that way there you guys can have just one more platform where you can sort of see what's going on in my portfolio. It doesn't tell you the exact numbers. It just gives you some percentages, but it does let you know what I'm doing. And it gives me an opportunity as well, just to throw some stuff up there and to interact with to interact with some of the other YouTubers, because there's a lot of Canadian YouTubers that are all sort of jumping on board there. So that's kind of fantastic. And, I definitely love it over there. It's given us an opportunity to let people see the community, let some new people come in, see what's going on. And I mean, as a Canadian financial YouTuber as well, I love finding other Canadian financial YouTubers that I haven't heard of and, checking them out and doing my best to provide some support and provide cross traffic. Because I think the Canadian financial YouTuber community is fantastic. I think we're a great group of people. You don't see a lot of of negativity at all between different people. Like, for example, we got Scott over there at Create, Save, and Invest. I'm over there promoting his channel. He's promoting my channel. It kind of goes that way. And I do everything I can. I'll do everything I can for a fellow Canadian YouTuber. Like, if you are, and here, let me put this out there. If you are a Canadian financial YouTuber, and especially if you're small, let me know. I'll check you out, and I'll, see if I can throw some traffic your way, because that's how we all grow by discovery and things like that. All right. Now, Abhilash asks, do you think lower home sales will bring down bank stocks from fewer mortgages being issued? That's a really good question. I think right now, and I do have a story as well that we're going to get to in regards to mortgages. So right now, in at least one market, and let's not even talk about mortgages, let's talk about price of homes. In one market right now, Toronto, in February, and I'll just skip the story, I'll tell to you now anyway. In February, the average value of a house actually went up 1.1%. And that increase can almost be tied immediately to the to the fact that they're pausing on the rate hikes. So it's now getting to a point too that there is a scarcity of houses, and that is starting to push back a little bit. We're still, with that Toronto market, it's still down about was it either somewhere between 17 and 19% for the whole, since their peak last year. So they're still down a big amount, but we're slowly starting to see some stuff happen now that we've got these rate hikes paused. It'll really depend on if the Bank of Canada follows through. Like, there's no guarantee that they've paused it on Wednesday. I think everybody and their dog believes they have. I believe they're going to stick to it. And I think it would almost be suicide for them to just not and say, "Oh yeah, we decided we're going to do one more." I think what they'll do is, even if they thought they needed to do one more, I think they would still keep this pause and then do the next one. But we'll have to see. Now, there's going to be some interesting reports that are coming out as well after the pause, and we're going to get to those as well, because I do have a new little feature at the end where I basically just let you know what type of things are happening next week that may impact the markets. All right, and Brian McGrath is in the house. Relax, I made it, everybody. Good day, all. And 9, for ROC, does the book price go down in price? I noticed HYLD used ROC for 2022. I haven't noticed a change in my book price yet. So ROC is return of capital. And what that does is, well, it depends on where you are holding it, first of all. So if a company is using a return of capital and you have that in a registered account, you don't need to worry about it at all, because it won't even affect you. But what happens with return of capital is, if you have it in non-registered account, and a company, instead of paying you all of your money in dividends, they do it in a return of capital, what that does is it actually affects you when you go to sell that stock. So when they return some capital to you, all of a sudden, the price point, your average price point on that stock goes down. So when you sell, like maybe you bought all of your shares, let's just say you bought everything at $10, and then they do some return, they keep doing return of capital because that's how they're making their dividends meet. Well, you go to sell. Now, normally in calculating your capital gains, you would have calculated it from 10, but because of all of the return of capital, all of a sudden you may be calculating it from 9. So it means that you're going to have a slightly bigger capital gain than you would have had, even though you haven't actually made extra money. On paper you have, and when it comes to taxes, you're paying a little bit more, and that's kind of what return of capital does. So right now, I have not seen a lot of return of capital with HYLD. But I do hold all of my HYLD in a registered account. So I would recommend, anytime you're looking at, especially any of the higher covered calls, I know a lot of them will say we don't do ROC, we don't do return of capital. But if you've got a high, whether it be a covered call ETF, whether it be a A split core, if you've got like a split core, you're getting some crazy dividends. Those are things you want to keep in a registered account. Also, REITs, you want to keep REITs in a registered account as well. So when you get to a point where, let's say your TFSA is full and both your TFSA and your RRSP is full, at that point, start looking at putting, for example, your growth stocks in your personal, and any of these really high dividend stocks, keep them in your registered accounts. That way you don't ever have to worry about ROC, because that kind of sucks when you do run into it. Okay. Abalash says, what happens if you day trade in a personal for 1 day a month? Would this count as business income or capital gains? All right. Well, when it comes to day trading, if you have behavior that is day trading, which is basically buying and selling over and over again, even though it's in a personal account, technically that would count as business income and business losses, not capital gains. So a capital gain is, here's a good rule of thumb. If you are selling it in less than 30 days, a lot of times the CRA will look at that hard and say, that's business. That's not a long-term investor behavior. So if you were, let's say you sold a whole bunch of the, we'll just say, okay, the Tesla high yield, so the YTSL. If you sold a bunch of that and then you bought it back the next day because the price came down because Tesla had their inventory meeting, well, they would look at a behavior like that and they would say, oh, that's day trading that you're doing there. You're not actually looking at regular investing. But whereas if you sell one stock and then you buy a different stock, they're not going to really look at it so much as day trading. Now, the big thing too is this is where you want to be careful in your TFSA. So you don't want to be day trading in your TFSA because they will hit you, and they're starting to really crack down on it. So what will happen in your TFSA is that anytime you sell anything in your TFSA, tell yourself this: I cannot buy that back for 30 days. That way you're never going to get, you're never going to get into any scrapes with the CRA. Like, there's nothing wrong with rebalancing things in your TFSA. And sometimes, you know what, you might see a quick profit that you want to take. Do it, but just don't jump back into that stock. Jump into something different. And then after 30 days, if you want to get back into that stock again, then absolutely do it. You're fine. That's cool. So that's kind of the way I look at that. All right, now let's see. If you use the profits from proceedings to invest into ETFs, they don't care what you do with the profits. If you're day trading and you've got profits and then you put those into your long-term investments, whether it be ETFs or things like that, it doesn't matter. It's the fact that you got those profits by day trading, thus it's business income. So they will charge you for that. And when I say charge you, tax you. Well, let's use the word tax. It sounds a lot better than charge you. Yeah, and that's one of those things. I think I need to make a video on proper behavior within TFSA, and just to sort of clarify business income versus capital gains, because I think people still sometimes get a little bit confused on that. All right. AA says, I'm pretty heavy weighting on XEQ2, which is a broad market, or XEQT, broad market index fund. And I was wondering if it would be a bad idea to add some VFV. I see that there will be some overlap. Well, yes, absolutely. There's going to be. Whenever you get into any of these all equity ones, whether it be XEQT, VEQT, they're very, very broad, and you are going to have some overlap. And that's okay. It's okay to have some overlap between different ETFs. A lot of times, especially if you start getting into, well, we were talking about something like HYLD earlier. HYLD doesn't just invest into a whole bunch of stocks. They invest into a whole bunch of different ETFs. So you've got ETFs now that hold ETFs. So you end up getting a very wide diversity. Now you can, of course, and this really comes down to micromanagement, but if you want to, you can go to the website for any ETF that you have, and there is usually a breakdown of everything that is in it. Now, here's the thing. There's two different ways you could handle that. One, you could go and you could actually break it right down to the company and maybe create your own spreadsheet and put them all together. Or you can just look at their sector breakdown and say, okay, well, this one here has 10% in tech, 10% in finance, and then you could sort of break it down that way in your way of diversification. But here's the other thing too, and this is what kind of makes it really hard for doing individual companies, is that a lot of times the managers, so the management, whoever's managing that ETF, their part of their job is to look for underperforming stocks that are not basically hitting the market average, whichever index it's. So let's say, for example, it's an ETF of the S&P 500. Well, if you have a stock in there that is underperforming the S&P 500 consistently, that manager is going to just prune that stock out and replace it with something that is hitting that average or doing a little better. And that's one of those reasons why it gets really, really difficult with ETFs. When it comes to diversification, I will usually just look at the sectors. Like if I know I have a weak sector, I'll pick up an ETF in that sector to sort of balance things out. So diversification is really, really, really important. But at the same time, you don't want to sort of get to a point where you're so worried about diversification that you're not really paying attention to your overall portfolio. So keep that in mind when it comes to diversification. All right. Hockey Nut is in the house. Hello, Hockey Nut. What does it mean if the NAV is lower than the stock price? Well, so the NAV is where they expect that price to be for that stock. Think of it as all of their indications say that's what the price should be listed at. So when it is above it, it means that it's actually outperforming what the company thought the stock was going to do. So that's not a bad thing. Normally, though, when you're investing and you're thinking, a lot of times you're going to see movement in the direction of that NAV. But the NAV is also moving daily. Think of it almost like a moving average in a way. So I wouldn't get too caught up in it unless it is a absolutely monster difference between the price and the NAV. Then you may want to take a look and find out what's going on with that company, because that would be just enough to make me think, okay, something's going on here. Let's find out what, because maybe it's something good that I can take advantage of, for example, and perhaps, make some money, or it could be something absolutely not so good, which might make me think, okay, maybe I want to back off a little bit from that particular ETF. So, and once again, you guys are giving me great ideas for videos. I really should do some kind of a video on NAV, just because people, I think, don't understand NAV that well. All right. Ayush says, thank you so much. And Vic is in the house. Hello, Vic. All right. And 9 says, so when you sell a fund that uses ROC, it will automatically adjust the price. I noticed my ZWC book price hasn't changed yet in the brokerage app. Yes. And keep in mind, just because a company uses ROC, it doesn't mean that they're always using ROC. So when you do have a stock that, let's just say, for example, a split core. So when the markets are bad, I find some split cores tend to be doing a lot of return of capital to make up for those dividends. But when the markets are better, so in a bull market, you get a lot less return of capital happening with these companies. So just because somebody does do ROC, it doesn't mean they're doing it. It means that they sometimes do it when they need to, because the return of capital is making up a shortfall. If they don't have the shortfall, then they're not doing it. It's when they have a shortfall, that's when they start to use return of capital. All right. Aish says, yeah, these would make a great video, super helpful. Oh, yeah, absolutely. What does it mean when a portfolio manager hugs the index? That's a good question. I've never heard it referred to as that way, but what does happen with portfolio managers is that if you are looking to replicate the performance of any particular index, hugging the index means that you're trying to, and this is what I think he means by hugging. I could be wrong on this, so take this with a grain of salt, but hugging that index means that they're trying to get as close to that replication as possible. So let's say, for example, the S&P 500, let's say in 2023, we're just going to zoom ahead in the future, but let's say we have a great year, and that S&P 500 hits about, let's say we have an 8% return on it. Well, that means that they're going to be trying their best to keep their stocks in line with that. They're going to be aiming for that 8% return on that ETF. Now, we're not talking dividends. We're just talking about straight up value of the two indexes. And that's kind of one of those things that they do. And that's why they will prune stocks that are pulling that average down, because they're trying to get the average. And in the video I just did on Saturday, we were talking about stocks versus ETFs. That's one of the big differences. You see, when you're looking at an ETF, and we're not talking about covered call, we're just talking about straight up ETFs. They're trying to replicate that average. Now that is safer, because they're pruning the ones that are bad, that are pushing things out, and they're making it better for the ones that are doing well. But when you're looking at individual stocks don't sort of confide to the average. If you're investing in Tesla, and Tesla has just a great, some kind of great event happens, that stock will fly, and you're going to go along with it. So I hate to say the word to the moon, which everybody loves to say, but you're going to head skyward on the charts. But at the same time, and this is why it's much riskier in individual stocks, when something happens, like, for example, that investor day, all of a sudden you're 7% down. And that's not happening usually with an ETF, except for, and let me give you that exception, if you have an ETF that only invests in Tesla, then they're not as protected. Whereas if you had, like, let's say one of Kathy Wood's ARK ETFs that has Tesla in it and everybody else, it's going to go down a little bit, because she normally tends to be heavy on Tesla. But some of the other ones are going to sort of balance that out a bit. So you don't have as much of a drop. That's what it sort of boils down to. Stock for Dividends says, hi, y'all. And Tim Carroll's in the house. Hit that like button. Yeah, absolutely. Smash that like button. Hit it as hard as you can, unless you're watching on a TV. For whatever reason, you can't hit the like button when you're watching this on TV. Who figures? Go figure, I guess. Vic says portfolio managers are incentivized to get their bonus. So once they beat the index and they got their bonus, they run back into the index. Well, yeah, that's their job, is to hit that average. So that makes a lot of sense. Absolutely. Any guess on the next rate hike for the US? I'm still thinking 25. I know that there are at least a few people within the Fed that would love to see 50, but I think unless some horrible stuff happens with some of the job numbers coming out between now and then, and I think there's one more CPI to drop before the US one, unless we get some really horrible numbers, I think they're going to go with 25. So that's going to be a little bit interesting. Now here's couple little pieces of news. I'm going to throw a couple pieces of news, and then we're going to hit back to chat. So S&P earnings. So for last quarter, the earnings on the S&P, when we're talking earnings, we're talking about earning estimates. So every company, of course, has an earnings, and there's an estimate on how much they would make. The 5-year average is that normally 8.6% of companies on the S&P 500 beat their earnings. That's their 5-year average. Well, in the last quarter, those earnings were only beat by 1.3%. So we're down quite a bit. So it just sort of shows that a lot of companies are struggling, and they're not at least exceeding expectations as normal. So that's kind of a reflection, I think, on the economy a little bit. So we need this to start improving. Like right now, I still think we have a recession coming, a mild one, and things like this make me think more and more that, yes, that's going to happen. So that will be very, very interesting to see what happens. All right. Duarley's in the house. Cheers from Calgary. It's snowing day today. Yeah, we just had a lot of snow here. Like the snowbanks in Ottawa are big. They're very, very big. At one point, like they would be really big here, but at one point they actually removed the snowbanks in front of my house. So that's going to be really, really, really interesting. What's with all these zero expiry trade options, Owito? I do not know that one, Vic. I will have to look that one up. I don't do a lot with options, but except for what I need to know. Like options are one of those things that I feel like I want to play with them, but at the same time, I kind of don't. Like I prefer just doing my fundamentals, getting in there, finding out what companies are gonna do. OOTD, I meant. That still doesn't help me any. OITO or OOTD. I'll have to look that one up, Vic, because I do not know. And I know you will ask me again, so I will be definitely too sure. And yeah, stocks for dividends says options are too risky for my blood. Yeah, my blood is a little too conservative for that amount of risk, but you know, it would be fun to do it just to say I've done it. All right, now we haven't mentioned Chat GPT at all yet today, and I don't have a lot on Chat GPT other than this. There's this new thing out there called News GPT, and I think the web address for it is news-gpt.io. And it is a new website that's apparently 100% AI generated. Now, I went over and took a look at it. I was not impressed. Basically, you go into a Chat GPT like thing, and you basically say, "Okay, tell me all of the Canadian financial news in the last week." I thought, "Hey, let's do it. Maybe it'll give me something I don't have." Um, yeah, it gave me about 6 of the same thing and a couple of other things. It wasn't very useful yet, but I think they just launched this thing, and I think, if they were to put a little bit of work into it, it could be really, really interesting. So, I'm looking forward to seeing where, News GPT goes. Alright, and Scott also agrees, on the options, absolutely. And Dominique says, I'd rather hold an ETF that does the covered calls for me. Yes, absolutely. Covered call ETFs are all the rage now. And it's funny, I was watching somebody in the States. I can't remember who their name was, but it was just a financial thing. And they brought up a thing about a covered call, and they're saying, yeah, this is like one of these. We got one, I think, a covered call ETFs. And I did reply to him and said, trust me, they're coming. We got oodles of them now in Canada. So, covered call ETFs are the rage, and if you love passive income, they're definitely there for you. But and I think I have it on the calendar. We'll look at the calendar as well before we're finished. But I think I've got planned a passive income, a covered call ETF, not a list one, but rather a let's look at and explain exactly how they're making money, and all of that. So that's going to be kind of interesting. Let's see here. Whoops. Great AI Canadian stock versus. Yeah. Well, it'll be interesting. We've already let that AI genie out of the bottle. So we're going to be seeing more and more as we go with AI. And that's going to be really interesting. Now, I mentioned as well earlier that I had a little bit of something on mortgages. Canadian Imperial Bank of Commerce, CIBC, they are reporting that 20% of their mortgage holders have balances that are actually growing. And that's because these monthly payments that they're currently paying are not even covering the interest with that interest coming up. So that is a recipe for disaster. So, and eventually you hit that tipping point where the banks will say, okay, we are going to adjust your payment because you're not even paying the interest at this point. So, there's going to be a little bit of woes. If they're looking at 20%, I imagine other banks are feeling that same burn, and that's not good, especially if these people cannot afford it. Now, sticking with banks, just a quick little thing on TD. So TD has actually paid a $1.2 billion settlement over, well, allegedly they had provided some support to a Ponzi scheme about 10 years ago. I think it was R. Allen Stanford. And now what TD said is, we just gave the guy a banking services. We didn't know he was doing a Ponzi scheme, but well, apparently it still ended up with a $1.2 billion settlement. All right, one last little story here before we jump back to chat. So if you haven't heard, Nordstrom is closing all of their Canadian stores by June. And this is going to be basically 2,500 people will get laid off because of that. So that's not good. All right. Hockey Net says a little higher, but worth the passive income. Yeah. Absolutely. Let's see here. I loved your covered call ETF videos. Does covered call compensate for the fees charged by the ETF? Well, yes. I mean, you're making a lot of money. It's just that, you're still paying a little bit out. But the fact is that when you're getting some crazy, like let's take, for example, that purpose Tesla yield, when you're getting 30%, when you're getting 30 cents on every one of those, and you've got a very small management fee. I can't remember exactly what it is on that one. Um, you don't even notice it, to be honest, in most cases. Now, where you will notice it is a lot of times if you have a growth one and you're not getting any dividends on that ETF, you may notice it with that. But for the most part, no, you really don't notice it. But a lot of us people here in the in the finance world, we tend to be a little bit on the side of the math geek, and so a lot of times we just want to look at that and crunch all those numbers. But honestly, most times you're probably not even going to notice it. To be honest here. All right, and Scott says over 27% of mortgage holders at TD and CBC over 35-year amortizations. Holy banana bread. So yeah, that sort of hits the nail on the head with that. So wow. And this is a good one. Tim Carroll says, reminder, next Saturday night, fall forward 1 hour. So yes, we got that time change coming up next week. And that's gonna suck because I like to get up around, just after 6. And that's when the sun is just starting to come up. So that's kind of like my alarm clock. So I know that, it is time for me to get out of bed. And of course, next week, that's going to be happening at like 7:20 instead of 6:20. So means I'll have to, go back to looking at the clock. But that's okay. I'll get around to it. And here's the sad thing. My kitten right now, she wakes me up at around 4 o'clock every morning. So she wakes me up, and I usually get up and go and use the washroom after and come back to bed because she comes in, she just wants to cuddle for about 10 to 15 minutes. So that's also going to be a time change. So that 4 o'clock little trip, because where we're falling forward, means that she'll be showing up at like, well, 5. So I actually, that one doesn't hurt. If she still does it in the fall, then it's like making me get up a little bit earlier. So, oh well, we'll have to see how that goes. Yesh says, I'm investing for long-term growth and have index funds in my TFSA. What type of investments does it make sense to make in a personal account? Okay, so here I'll give you, if your TFSA has tons of space in it, and you can find out how much space you have by looking on the CRA website. But if you've got, like, let's say you have 80,000 in your TFSA and you've got maybe 10,000 of investments in it, then there's no need to put anything in your personal in that account in that case. But here you did say long-term growth. So long-term, you don't have to worry about it once you've run out of space. So your TFSA is full. And keep in mind, there's that new home TFSA thing coming out as well in the spring. So you could utilize that more than likely. You've also got your RRSP. If you've got kids and you want to put some money away for them as well, you could put in an RESP. So there are different avenues of ways that you can keep that taxes down. So you want to be a little bit careful. Like, there's no need to put anything in your personal if you have tax-free locations that you can be putting it in. With that being said, if you are going to be doing short-term trading, which, we're talking more or less your day trading, then you want to be putting that in a personal account. You don't want to be putting that in one of your other accounts. All right. Whoops, that's all right. Here we go. Spring forward, made it. Welcome to the friggin' Oracle. And Jill says, you do realize that it does get lighter earlier as we go through the spring. Yeah, I do. Absolutely. I'm just thinking of next week. I was thinking of that one little time period. But then, yeah, it'll keep getting lighter. And pretty soon, as we move into June, the sun will probably be waking me up at 5. And that's okay. All right. Web Surfer. So the new CEO of Enbridge has been making big investments in a future dependent on oil and gas. What are your thoughts on energy holdings in a portfolio? So I am bullish on energy overall, but here's the thing. You have to, if you're a long-term investor, you want to be looking towards the future. And if a company is not putting anything into renewable energy and they're not looking at natural gas, they're not looking at hydrogen or wind farms or any of those things, then there's going to be a point where that is going to sort of, you know, it's going to hurt them eventually. Now, while we're still in this whole oil dance that we're in right now, it's probably short term, midterm, it's probably not going to hurt them. But long term, you want to look for a company that does have now Enbridge does have a good amount of renewables on their balance sheet. So that's good. But if they stop developing that side of the company, then you want to start saying, okay, what's going on? But also keep in mind too that Enbridge, a lot of their utility side as well. Ontario, Quebec, mostly. Well, it's mostly gas. I think we have Enbridge here, and we've got gas coming in, and it may be natural gas, but I definitely want to see some kind of growth. Probably one of my favorite companies, utility type companies, is Fortis, and they've been making a lot of strides on the renewable side. So yeah, definitely one of those things. And there are, if you don't want to actually get into a particular oil company, there are oil ETFs as well. Like, you can almost cater an ETF to whatever is important to you, whether it be if you do want to go with the green, then there's definitely things you can do with that. And Dominique has to run. Merci and thank you, Candace. And Aish, thank you. Awesome. All right, let's get to a couple more news stories here. So labor market news. So China has had an overall 41 million less workers today than they had 3 years ago. Now, the first thoughts that are going through your mind is saying, oh my gosh, was COVID that bad in China? It's not that. It's that whole baby boomer retirement thing that I've been talking about for a while. So what's happened in China is they have more baby boomers retiring than new people entering the workforce. And especially considering they had that whole one child per family, that has really, really starting to bite them now. So China is having some serious labor issues. And interestingly enough, that's going to really work in the favor of India. So we're going to talk about them in a little bit here. Now, there were some layoffs last week as well. Just a couple of interesting ones. If you guys remember Waymo, Waymo is a self-driving car division of Google. They're actually laying off about 8% of their workforce. Now, they're still optimistic that everything's going to be okay and that they're going to be, stay on schedule. But that's interesting. And of course, Twitter, well, they laid off another 200 workers, which is apparently at this point, 200 workers is 10% of their workforce. So their numbers are getting down lean. Now, Elon their ad revenue is down about 40%. And Elon is now looking to start sharing that ad revenue with content creators because he wants to try to steal people from YouTube and everything else. And he's actually saying that he's going to share that ad revenue with content creators via Twitter Blue. So I don't know if that means you have to sign up for Twitter Blue to be a content creator on Twitter. That'll be interesting. I'm very happy with YouTube personally, but all right, we're getting late into the hour here, but I still got more news. Let's just hit crypto really quickly because there was some crypto news. So Silvergate Capital. Now, they did advise the SEC that they are not going to be filing their annual report on time. Now, this is a big thing because the reason they're doing this is they're actually evaluating whether or not they can even stay in business. Now, what Silvergate Capital is they're a bank that lends to crypto firms. Now, this caused their shares to drop about 55%. But like I said, right now they're in a situation where they don't even know if they can stay open. In response to this, when it broke, in the wee hours of Friday morning, Bitcoin fell from basically $23,419 US to $22,000. So that was a nice big red candle for any Bitcoin. I'm sure the rest, I haven't looked at all of crypto, but I'm sure there was ramifications of this throughout crypto. Now, I think Bitcoin has slowly started to recover a little bit. More crypto news. Binance has now been given until mid-March to provide a whole bunch of information on their finances to a team of senators. They're being investigated on allegations of, well, two allegations. One, money laundering, and sanctions invasion. Holy banana bread. Tell you, let's hope that Binance is not guilty of these, because that could be pretty bad for Binance. And here's another little piece. Visa and MasterCard, they had been planning to get into accepting some crypto payments, but they're putting all of that on hold until the market conditions improve. They're like, nope, it's a crypto winter. We're not going to get involved in that. All right. And the freaking Oracle says if you were looking for renewables on the crypto side, check out the Grove token. And let's see here. 58,000 BTC sold go to Silvergate. Yeah. So, I mean, and yeah, and the freaking Oracle knows a lot about crypto. He has a show on Friday night. So if you're ever looking to get in there and have some really deep crypto conversations, he's a guy to check out. All right. Couple more pieces of news. We're going to just pull this last bit of news out, and then we'll just chat for a bit. So Sky Canada Project. So there's a new project called Sky Canada Project, and this is a new government investigation into, this is going to sound funny, Canadian UAPs, so unidentified aerial phenomenons. So the Sky Canada Project, they're going to report directly to the PM and the Minister of Innovation, Science, and Industry. And they're also going to provide a public report in the fall of 2024. Now, before you start thinking about, aliens, this is not even about aliens. This is simply because we got things in our sky. We don't know what they are, and they could be a national security risk. And that's part of it is some of that, like that thing, balloon thing or whatever that was shot down over the Yukon. They still don't know what that was. So that's what this is all about. It's just basically looking at tightening up our sky and making sure that we don't have spy stuff flying over us and, whatever else happens to pop up into there. All right, got one last news story, and then we'll talk about what's going to happen that could affect the market next week. And that is Apple. Apple has been planning to move a lot of their production out of China, and they're looking at two places they want to move to, Vietnam and India. Now, a lot of people thought this is going to take a long time for Apple to manage to pull this off because they have so much over in China. Well, apparently not. So Gore-Tex is a major Apple supplier. They've already begun to invest millions into a new production plant in Vietnam, and they're starting to look for places they can put some stakes down in India as well. So maybe Apple's going to move a little bit sooner than we think. All right. So next week, this is that little thing. So these are the things coming up next week. So we got a few things. On March 7th, our good old buddy, Jerome Powell, is going to be testifying to the Senate. Really, this should not affect the market. But unfortunately, I have discovered anytime Powell speaks and it gets put up onto the interwebs, it tends to affect the market in one way or another. All right. So that's March 7th. March 8th. So that was on Tuesday. On March 8th, which is Wednesday, we got a whole bunch of stuff that's going to come out. On the Canadian side, of course, we've got the Bank of Canada interest rate. And as we already said, we're thinking that hold is going to stick. And then, of course, Jerome Powell, once again, this time instead of the Senate, he's going to be testifying to the House. But here's a big one that's coming out on the 8th as well. The U.S. JOLTS, which is the job openings report. That's coming out. Then on March 9th, we got jobless claims coming out in the U.S. And on March 10th is a big day because we got all of the Canadian job data and the U.S. job data all dropping. So that's on the 10th. So we got every day we got something happening this week except for Monday. So Monday should hopefully be just a nice, lazy little green start to the week. That's what I'm hoping. All right. Now, before I get back to the chat, this is all that I've got coming up on the channel. I'm actually excited. I got a lot coming up this month. So right now, so tomorrow we got our top 8 high dividend aristocrats video coming out. And then on Thursday, we're doing a deep dive on National Bank, which I've been really happy about. Then on the 11th, as I mentioned before, we got the channel member video. This time it's going to be how to use stock screeners. So if you want to find out how to find stocks, this is the video to watch. if this is something you're interested in and you're not a channel member, sign up down below. I think there's a whole bunch of different ways you can do it. I think there's links as well, all of that fun stuff, and you'll be able to watch that video. We'll, of course, be back here again next week with This Week. Well, I don't know what the video yet is on March 13th, but on March 16th, right now, we're having a vote. So if you haven't been on the community tab, just stop over on the community tab and you can vote on that deep dive. It is between Canoe EIT, Scotiabank, or Pembina Pipelines. So whichever one gets the most votes, that will be the deep dive that we're going to do. And that's one of the things I'm doing, because a lot of these deep dives from a year ago, I'm going to start putting them together. Now, somebody did ask me today. They said, hey, the ones that, because I did this last week in Enbridge one, and they said, can you take the losers from the 2 batches that you did and let us vote on them? And I was like, yeah, that's a great idea. So after that, we're going to do another one, and that's going to be for the losers. They'll come in and we'll figure out which one of those you guys want me to do as well. Then, okay, oh, and this is the one I was talking about. So on March 18th, that's a Saturday video. It's going to be that covered call ETF video where I just break down what covered calls are, how these ETFs work, and we'll break down some of the different ones that you can get as well. But it's not going to be a list video per se. It's mostly about just what they are, how they work, how you can use them to your advantage, all of that fun stuff. And then we've got a deep dive battle coming back. Now, that's going to be March 23rd. So I'm just sort of skipping ahead. We got like another live stream in there as well and another video. But we're going to bring back a battle, and it's going to be Manulife Financial versus Sun Life Financial. That one will be absolutely exciting. And then, of course, we'll have that. And then the last day of March, not the last day, but the 30th of March, we have that deep dive. That will be all of the 2 losers from the 2 different weeks that you guys are going to get a chance to vote on. That'll be that one as well. Because keep in mind, when I say there's losers, these losers are great ones already. Like, for example, we got RioCan in the list of losers. We got CNR in there. And depending on this one here, we'll have a couple of others as well. We'll have 2 others. So they're all going to be really good ones. And we'll figure that all out, and we'll get that all done. So that's what I have scheduled so far. So yeah, it's definitely looking exciting. This is going to be a pretty darn exciting month. Vic, why? All right. Pembina. Is that it? Pembina. I keep wanting to say that B. I'm not used to silent B's. Usually when there's a silent B, I end up getting stung because I don't see it. Oh, that was a horrible joke, but that's fine. I thought I would go with it. Does the CRA punish you if you day trade in an RRSP? Well, if they catch you, well, here's the funny thing. RRSPs are kind of another thing. Like, the problem with day trading in an RRSP is that, one, if you pull the money out, it becomes income anyway. So in a sense, it's kind of not a great place to even think about. So I don't know if I've never heard of them going after people day trading in an RRSP, but just because of the way an RRSP works, that would be not a great place to actually be trying to day trade, because you can't really pull it out without it turning into income instantly. So I think in that case, they probably wouldn't care as much. But the TFSA, where it's so powerful, that's the reason they really, 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 clamp down on the TFSA. So yeah, I would say I still wouldn't do it in the RRSP. Even if it were allowed, I still wouldn't do it in the RRSP. It's just simply not. Oh dear, I just saw a comment up ahead. Kind of like numb. Okay. Jay and Silent Bob. Oh dear, that is absolutely funny. Good old Jay and Silent Bob. Here's an interesting thing. I was on the Facebook. I was on Facebook the other day, and I follow Kevin Smith, so Silent Bob. And now he's heavy into like weed and stuff. And now he used to be pretty big because he had a heart attack, and so he took care of his weight and everything. But he did a post the other day, and he was just talking about his life, and he was like, I'm now 5 weeks sober from weed. I'm like, what? Really? He was one of these people that I never could picture him not being, into the weed stuff. So, but apparently, apparently Silent Bob, so Kevin Smith is no longer doing the weed. So that to me is just interesting. And Brian is absolutely right. So in an RRSP, they get their cut eventually. Well, yeah, absolutely. Like you know, you either pull it out then after you did it, and that's kind of the purpose of day trading is you're trying to create an income for yourself. So you have to kind of pull it out if you want to use it, and then it turns into income right away. So I think that's one of the reasons why I've never seen anything about the CRA and day trading in an RRSP, is for the simple reason that they got you either way. It doesn't matter. There's no loophole for you to exploit in that RRSP, unlike the TFSA. So, and also keep in mind that when you pull something out of the RRSP, that space is gone forever. So it doesn't come back like it does in the TFSA. So that's kind of part of that whole loophole thing. And I think the reason they really, really concentrate on the TFSA. All right. So hey, we're coming up on the end, folks. If you got any burning questions left, throw them at me now, or forever hold your peace until next week, or reach out to me in other ways. So there's all of that as well. I'm gonna have a sip here of my bubbly strawberry bubbly. Now they have a raspberry bubbly that comes out, and I want to try that, but I haven't seen it yet. So, oh, that's good. All right. Okay, so if there are no more questions, then we'll wrap this up here. It's been fantastic. We've had a lot more people here today. I've noticed that there's been a lot of interaction. Like I had to struggle to get through the news, and that rocks. Because keep in mind, the news I bring to this week, it's just a medium. The most important thing is you guys and being able to talk to you and all of that fun thing. And 9 says, thank you for the stream. You are very welcome. I love doing this every week for you guys. So we'll see you guys back here again next week. And for those of you who do want to see that video on the screeners, be sure to jump into the channel membership. It's definitely, it's cheaper than a cup of coffee every month. So we will see you guys all again next week. And we will just end on Scott saying, thanks, Candace. Have a great week, everyone. All right. Take care, everybody. We'll see you guys again really soon.